TabbFORUM is really about the trading community, and the trading community is really about the people who are making the decisions. And one of the most interesting authors that has focused on our community is Jack Schwager. Jack has wrote a lot about market wizards, and I'm here with his new book, The Little Book of Market Wizards. And it's really a very interesting collection of thoughts and ideas from interviewing traders for many, many years. So Jack, thanks for coming to the TabbFORUM community.
Thank you, Larry.
Talk to us a little bit about what the Little Book of Market Wizards is about.
Well, it's basically, over the past, well, now quarter of a century, I've done a number of books on interviewing the great traders of our time. And this book is actually a distillation of what I consider the key lessons that I've gotten out, key trading lessons I've gotten out of all of those interviews. And so it differs from the original Market Wizard books in that it's not a question and answer format, but rather it just distills each chapter as a basic theme that I think is important to trading success, and uses any of the 4 prior Market Wizard books for its anecdotes, its quotes, and just tying it all together into one chapter that focuses on that particular lesson.
On that theme. So I guess to a certain extent, what are some of the, is there a secret to success? Is there one theme for all these guys to use, or what are, what are the most important things that you've distilled out of talking to these really impressive traders over many years?
Well, first of all, let's start out with that one secret is there is no secret to success.
Okay. So there isn't.
So there is no magic formula.
This book isn't the little secret of formula.
So if anybody out there is suffering under the delusion that there is some sort of magic formula that
all these guys
people find, and then they haven't, as I would put it, they have not only not found the right answer, but they haven't yet figured out the right question. Mm-hmm. So it's not about finding any secret, because the traders I've interviewed, they share commonalities, which we'll get to in a moment. But they're very, very diverse in terms of their methodologies. They range, they're completely different. You wouldn't, one approach has nothing to do with the other, and in many cases their approaches seem to be almost in conflict with each other. Mm-hmm. Yet they all make money because of the things that are important, which we'll get to. Mm-hmm. So what I tell people is one important takeaway that you should get out of all these interviews, and one of the first things, one of the first early chapters I have in this book, is you need to find an approach that works for you. There's no one right approach, but there is a right approach for each individual, and it will differ from every individual, no more than everybody's going to walk into a clothing store and pick exactly the same size suit. Right. It's kind of ridiculous to expect that. You wouldn't call somebody up and say, "Hey, Jack, what size suit should I get?" Well, I don't know. I don't even know who you are. And that question makes as much sense to me as people saying, "Hey, what trading method should I do?" And they send me emails or send me a letter or ask me when I do a talk, and they'll ask me that question. Well, I don't know. I don't know anything about you. How can I tell you what trading methodology you should use? Mm-hmm. So people have to figure out what's right for them. Do they want to more attuned to technical, to fundamental, some combination of the two? Which markets do they want to trade? Are they long term? Are they short? It's an endless checklist of things that they have to figure out. But ultimately, if the people who are successful figure out the approach that works for them.
Interesting. So and so what are there were a couple of things that we talked about that actually are pretty critical. Money management, risk management, figuring out what are some of those things.
So yeah, so let's start with that, because the people tend to not pay too much attention to risk management. As I said, I think the people pay 95% of their attention to where to get in, and 4% where to get out, and 1% risk management.
So there is no secret to I should be buying Apple. I got to buy Apple.
Well, it's not. Yes, it's not the getting in part. It's not that way. It's not a method for figuring out what to buy. What to buy.
What to get in.
What's really critical is that you have a methodology that doesn't allow you to self-destruct on any single or small group of trades. Mm-hmm. That all these successful guys, or almost all of them, have a methodology that really controls their downside. So it's not like that they're never wrong. Everybody's wrong a good percentage of the time.
In fact, you talk about in the book that, you know, that it's nowhere even near like 80 or 90%. These guys are only right maybe 55 to 60% of the time.
And some of these guys are
that's
only
really,
right.
really good.
And some of the guys may only be right 30 or 40%. However, when they're right, they make a lot more than when they're wrong. And so too many people get fixated on being right a high percentage of the time. Again, that's not what it's about. What it's about is that
not being too wrong.
How much you win relative to how much you lose is a edge. And that's both a combination of the probability of winning and how much the amount that you win when you win. And the critical part is the downside of that you don't want to allow any single or a few trades to sabotage
to blow you up.
Or this. And there are plenty of brilliant traders who may have skill and knowledge, and they blow up because what they lack is the ability to let go of trades when they're wrong.
Yeah, we talked a little bit before about you know, the ability not to fall in love with your positions. You know, talk a little bit about that.
Right. So lack of loyalty, I put that under the banner of lack of loyalty. You want to have no loyalty. Loyalty is a great trait, friends, families, pets, whatever. But it's a lousy trait as a trader. If you're a trader, you want to have zero loyalty to your positions. And the ordinary guy or the unskilled trader, investor will get attached their ego to the position. And so when they start losing money, they don't want to get out because, hey, if I get out, I lock in a loss and I admit that I'm wrong. And it's very difficult psychologically, emotionally to do that. But good traders have no problem doing that. If they think they're wrong, or if some trade is going where they shouldn't have had, they'll be out instantaneously. And if we've got a moment, I can go to the Druckenmiller episode. Okay. So the classic example of that, the epitome of that trait of lack of loyalty to position, is Stanley Druckenmiller. Stanley Druckenmiller is probably known to a portion of your audience, but for those who are not, you know, Druckenmiller ran his own fund, the Duquesne Fund, for like about 30 years with close to a 30% compounded return during that time. He also ran Soros's quantum funds for many years while Soros was off in Eastern Europe and Russia. So one of the great all-time traders. And Druckenmiller, in '87, October 16th, 1987, the Friday before the crash, came in that day. He was net short, and he decided the market had come down enough. So he basically covered his entire short position and then went long. And not only long, he went 130% long, leveraged long. And I used to give talks and ask people, did anybody in the audience ever make a worse mistake? And I stopped asking that question when I realized I could not even make up a worse mistake. So over that weekend, Druckenmiller decides, for various reasons which we don't have time to go into, but they're not critical to this discussion, that he's wrong. He made a mistake. So he knows he wants to be out. Trouble is, that Monday, the market's closed, and that Monday the market comes in, and we're first hour trading, we're down like 12% or something. So what does Druckenmiller do? With the market gapping way down, he covers his entire new long position, and here's the kicker, he goes back short again. Now talk about lack of loyalty to a position and flexibility, the ability. And then sell in just such a horrible market. And such a right, because he knew it was the right thing to do. But that, to me, that trade is sort of the epitome of a professional trader. So
you've talked to Stevie Cohen, you've talked to Druckenmiller, you talked to Paul Tudor Jones, you talked to a bunch of impressive people in this book. What's the most memorable, or who are the couple of most memorable folks you talked with, and what's the takeaway, I guess, out of some of these?
Well, there are a number of there are a lot of interesting individuals. It's always hard to find, So in terms of achievement, there's all sorts of people. We could take up the entire interview time just talking about what these people achieved. In terms of interest, like Michael Marcus, who's the first chapter of the First Market Wizard book, who's mentioned in a number of the anecdotes in the little book of Market Wizards. That was a particularly interesting interview because while a lot of traders I interviewed failed initially, he had sort of this litany of failures, and it's sort of quite fascinating that here's a guy who blew up, and then went on to sort of he went on to get a trading job at Commodities Corp, and they gave him a $30,000 account to start, and he ultimately turned it into $80 million. And I should add here that I actually was at Commodities Corp, so I know this is a true story. It's not one of these things like his hearsay. and that sort of so that was like an extraordinary that particular whole story. And there were a number of brilliant people, like I mentioned, Ed Thorpe, who I interviewed in the most recent Market Wizard book, and again, who comes up, I think, here in a couple of chapters, having one of the most spectacularly unbelievable track records. First hedge fund, 19 years, 19% gross returns, but the key here being that in 19 years you only had 3 months where you lost anything, and in each of those 3 months was less than a 1% loss. So mathematical probabilities of that being due to chance are far less than picking one atom in the entire mass of the Earth. It's infinitesimally small, and I call somebody like Thorpe a walking refutation of the efficient market hypothesis.
Yeah. Interesting, interesting. So you're also doing something something new with something called Fund Seeder. So what is fundseeder.com, and what are you trying to accomplish? Okay,
fundseeder.com. I want to give credit here to Emmanuel Ballery, whose idea it was, and who's the primary partner, but I'm a co-partner in this venture. And the idea is to bring together undiscovered traders who have talent but can't raise assets because they don't have a lot of money and they don't have they haven't worked for anywhere they got a track record. And we're talking, by the way, globally. We're not just talking U.S. I mean, there are so many millions of traders out there. Even a very small fraction of those, the best of them, you still have a significant universe of talented traders. Right. And to link them up with seed investors who are looking for trading talent, undiscovered trading talent, and do it through a middle link, which is fundseeder.com, that acts as a verification platform. So it's not like we're coming. It's not like traders send us their track record and we post it like some sites do.
Right, right.
Literally, this site will link to the trader's account through the brokerage.
So it takes drop copies, so you can verify.
It can be verified in real time, right? And for past track records, it's set up so that we can do audits of past track records if they're going to be posted. So the seed investors who go there know this isn't just like a site that's posting people whatever because people can make up any returns they want, right? Yeah. And it happens all the time. It happens all the time.
One big guy's getting, in jail somewhere, I don't know wherever he is, Connecticut, I don't know, whatever, for doing just that.
But there's lots of people who do that. I mean, all sorts of, it happens all the time. So this both from the trader side, it gives people who have no chance of raising assets but have skill a way of finding the assets, and from the investor side, it gives them the opportunity of finding these traders they can never find.
Interesting, interesting. And that's live? That's live?
Oh yeah, so fundseeder.com, it's live now, but it's right now. I'd call it more of a landing site. So, there's a little animated thing which explains how the site will work and everything else. But the actual grits, the actual working process that will do what I just described, that's still several months off technology-wise, and so it's being developed right now.
Very interesting.
And anybody who signs up at this point, we will keep posted on developments as they happen.
Interesting. So, for you emerging traders out there, fundseeder.com. For you traders and people in the industry, as well as actually people interested in traders, Little Book of Market Wizards by my guest, Jack Schwager. Jack, thanks for coming into TabbFORUM and talking about Little Book of Wizards and Fund Seeder and interesting discussions with lots of traders over a long period of time. Jack, thanks for coming in.
Thank you.
I'm Larry Tabb, founder and CEO of TABB Group, and thanks for joining us.